What's up, everybody? It's Gus here at Trade the Pattern. So we're going to take a look at the Bitcoin chart. We're going to add some context to it. We're going to try to understand and visualize the crowd psychology behind it. We're also going to take a look at the correlation between the Nasdaq and the Bitcoin chart. Then I'm going to tell you exactly why I think Bitcoin might be headed lower. So let's get the ball rolling. All right, so first things first, chart reading 101. Larger time frames dominate. Okay, so we're going to zoom out, get an understanding of the big picture. This is a monthly chart of Bitcoin. As simple as it gets, primary trend is up. Both moving averages are pointing up. This is the 20 period. This is the 30 period. But we're going to focus on the weekly chart for both Bitcoin and the Nasdaq. Now I'm going to draw this bounding box here in the Bitcoin chart, and I'll come back to it later on in the video. All right, so time to add some context. End of 2017 started the influx of new people flocking into the markets. The primary catalyst was the insane run of Bitcoin from 6,000 to 20,000 in just a matter of weeks. This in turn began to fuel the media frenzy, which in turn drew in more people in. Fast forward to October 2019, the start of zero commission trading, and soon after, December 2019, the search term how to trade stocks and how to trade crypto breaks out to all new time highs on Google. It's basically everybody and their mother trying to figure out how to get in on the action. Now, March of 2020 rolls around, the US begins to implement lockdowns, and with more and more people at home looking for additional ways to generate income, the crowd continues to open up accounts and throw more money at the markets. First round of stimulus checks rolls out in December of 2020, adding more fuel to the fire. The Fed machine is operating full steam. The market's risk on. Assets begin to inflate. In 2020 and 2021 saw some of the wildest runs in crypto, stocks, major short squeezes, specifically in meme stocks and meme coins. Okay, so we're back to the bounding box, and now that we added some context, we can get an idea of what the sentiment was during the time in which this price action here took place. Now I'm going to draw a bounding box here on the Nasdaq chart, and I want you to hold that thought because I'll be right back to it. Okay, so back to the weekly chart on Bitcoin. Now this is fairly simple. There's no need to use a ton of indicators or calculations to get an idea of what's going on. We already know the context behind this entire scenario here. Basically, anybody that bought at 30,000 or better that held is currently either in a losing position or a break-even position. Anybody that bought here in the past and held here, whether it was here, whether it was here, whether it was here, that crowd is currently in a winning position. They have no reason to sell. Now this crowd does have a reason to sell, and more so a reason to panic. Number one, because we're no longer in that 2021 environment. I want you to go back to a time where you had a winning trade that came right back to break even. Or worse, a winning trade that ended up turning into a losing trade, and then it just continued to bleed out. This is where we're at this point. We have a massive amount of overhead supply. Overhead supply meaning people who are willing to sell to either minimize losses or break even. You got to remember, a lot of this volume here carries a lot of retail traders, a lot of amateur traders. Those are the first one to bail out when shit hits the fan. So any push forward is going to have more selling pressure from these guys than this original move forward. This original move forward had no sellers. There was no problem here because the sellers were not existent. Everybody was happy. Remember, everybody was winning. In this case, we have a bunch of losers. And human nature, and this is basic human nature, a lot of people are going to want to break even, specifically because this is not the 2021, 2020 environment. We're now in a completely different environment where there's a lot of uncertainty, there's high inflation, cost of energy is going up, the cost of practically everything has gone up, which in turn means less money for people. Now let's do a quick analysis on the range here on these Bitcoin candles. Again, no need to get any fancy indicators, just take a quick look. We have a move from 30,000 to 40,000. That's 10,000 in just 2 weeks. We have another move from the lows of 30,000 all the way to 58,000. That's almost $30,000 move in 3 weeks. What does that tell you? One candle 58,000 to 44,000. Two candles, 59,000, basically 60,000 all the way down to 30. So it has the potential. Bitcoin on a panic has the potential to move 10 to 30,000 and no problem. This is why my target here, $19,000 area, $20,000 area is not unrealistic at all. This is only 10,000 down. All right, so let's talk about the short sellers. There is a lot of short sellers just drooling and waiting for this break of support here. They're waiting for their moment. I told you so, Bitcoin, yada, yada, yada. Don't underestimate the short sellers. I want you to take a look at this drop from here to here. I want you to take a look at this volume bar, okay? Those that were short Bitcoin during this drop, especially the whales, the individuals with the large positions, this is one of the best opportunities to cover on this wash
because this is where there's the most liquidity. You see this volume spike here, okay? So you have a combination of short covering. You also have some traders that bought the dip, but now we're hanging sideways, okay? This is indecision. You're seeing this across several markets. We're chopping sideways. The S&P 500, the Nasdaq, Bitcoin. You can see there's a slight correlation. And this is just basically waiting for any catalyst to help it decide which way it wants to go. So my guess is this. There's a lot of short sellers here waiting for this drop. What I think will happen is this: we're going to meander around sideways for a little bit, and then we're going to start to perk up. And as we start to perk up, the short sellers are going to start panicking and start covering, causing the price to uptick, which in turn will get buyers that were on the sideline waiting for this to resolve to start chasing. Once you run out of buyers and you run out of short sellers covering, and price stalls, these people are going to also start to panic and start selling and start selling. And once we start seeing this situation, you kind of get the formation of the head and shoulders pattern. I don't like them calling by the name. It's just a formation. This usually leads to a sharp decline in prices. And I believe the next target would be the 200-day moving average, which is right here. That's around that. By the time that happens, that could probably be around 22,000. So your first stop would be around 22,000. Your next stop usually around 20,000. The reason why I put 19,000 is because usually there's a slight drop under the key level, another one of these events where there's liquidity, and you pop right back over, and then perhaps you get a bounce. All right, let's pop over to the Nasdaq chart. And this again, we're going to keep it very simple. We have a major key level of support. So both the Nasdaq and Bitcoin put in a peak in November of 2021. At the same time, the Nasdaq puts in a low in January of 2022. Bitcoin also puts in a low on January of 2022. Both the Nasdaq and Bitcoin put in a higher low here in March of 2022. And last but not least, I want you to take a look here at the Nasdaq, which has broken a key level of support, retested it, and it's currently trading sideways. Bitcoin has not broken this key level of support. Now, correlations between charts don't necessarily have to continue, but assuming that this correlation continues, assuming that the Nasdaq continues to fail to break above this prior support level and we start putting another leg down, that could be another catalyst that could potentially start to bring the price of Bitcoin down.
On the next video, I'm going to talk about trading strategies. We're going to talk about the framework in which every trading strategy sits on. We're going to talk about strategy building. You ever held a losing trade past your stop loss and you held for too long? Or perhaps you got stopped out only to see that trade come right back up. Ever sold a stock too soon? I'm going to talk about strategies for dealing with each and every one of those situations. Don't forget to hit the like button and subscribe. See you on the next one.